Hey everyone, welcome back to your Money Life podcast. We're on episode 328 of the pod. So do me a favor, wherever you're listening, you like, subscribe, 5-star rate and review so that we can get into this episode. We have a lot to discuss. There's a good amount of stuff going on that we want to make sure that we hit each target, each thing. First and foremost, starting with a market update and giving you guys a market update of the week. Let's jump into that. Here we go. I'm giving you a preview of what's going on so far in the futures market. If you get this before the market opens, you're seeing the futures are trading slightly lower today to start the market today. We had a pretty positive day yesterday, fairly green everywhere on the market. So that's a plus. Let's dive into it. Look, you see here, you have our first day, our last 5 days of trading, our last week, we're about flat. We've had a bit of volatile days, some really strong days, some not so strong days, but we're about flat now over the past 5 trading days. But if you just pull the picture out further, then you're seeing really, really green positive territory for the market and investors buying. They're just buying. If you have assets that have extra cash, you're just buying at this time and or holding, which bids the price up for other buyers that want to come in. And if you see over a month time, we're over 4.5, we're over 4.58%, over 4.5% on the market over the past month. 6 months, we're over 13%. And year to date, from the beginning of the year, we've had volatility this year, but we are up over 8% year to date on the S&P 500. That's kind of impressive. If you get to the QQQ and different other assets, you're seeing a lot higher. Let's look at QQQ, which is high level tech focused. You're seeing year to date 15%. Technology driving the market higher. 15%. Technology driving the market higher. And so yeah, that's pretty much the market update. Like what is moving? We're gonna jump into that. Basically, something to watch right now is investors are watching the treasury yield and where that's headed. So if you're looking at it still, if you think about crude oil, that's another theme of the market. Crude oil prices jumped after Reuters reported, citing sources that Iran's supreme leader issued a directive to keep enriched uranium within the country. That's further complicating the US Iran war. So that had crude prices jumping. The oil spike was followed by moving higher treasury yields as traders grew fearful of rising inflation. So if traders are growing fearful of inflation, treasury yields are also going to move. The benchmark 10-year Treasury note yield climbed 5 basis points to 4.615%. The 30-year bond advanced 3 basis points to 3.665%. So you're seeing the yields increase, and that's usually a not a great sign for forthcoming for the market. But we'll see. We have stocks that have rallied Wednesday after they snapped a 3-day losing streak for the S&P 500, even as oil prices and bond yields retreated yesterday. So investors, are really thinking that they've just been really positive so far in 2026, 2024, 2025, and 2026. We have strong earnings. We'll talk about some of them. You had strong earnings seasons that delivered a lot of really, really strong numbers for some companies, especially Nvidia, who had their quarterly report beat Wall Street expectations. So we'll dive more into that here. But that's basically the biggest themes right now you're seeing play in the market. And as we showed, again, it's been firing in all cylinders so far, firing in all cylinders. Let's go through Nvidia's quarter. They had stronger than expected results in the latest quarter. This is an extension of a wave of AI-driven demand for its semiconductors. The power this AI boost usage and all the things that people are using with the models and the large language models, from consumers to institutions, you're going to need those semiconductors that can do some of those computing powers. And NVIDIA has a huge market, the biggest market on that, share on that. And Google's actually coming into, Alphabet's coming into the fray with their own chips as well. But right now, NVIDIA has that market. But earnings per share they beat handily on earnings per share. Revenue surged to a record 81.6 billion. The result came amid a sharp increase in AI spending by major tech firms. So Nvidia and Google are actually fighting for the highest market cap company. I think Google overtook them last week after Nvidia had been holding that spot for a good year or so. These companies are battling right now. this is a battle right now. And they're battling for AI spend. It's a sharp increase in AI spend by major tech firms. Amazon, Alphabet, Meta, and LinkedIn parent company. Microsoft plan up to 725 billion in capital expenditures this year. And we're going to talk about where they're getting this money from. Yes, earnings, they have lots of money on their balance sheets, but they're laying off, a lot of people are laying off workers. Not every company, but some. And they're pointing to AI. But Nvidia is growing. They have a lot going on there. So let's talk about some of the layoffs that I was mentioning. So Intuit is a company that does a lot of different things, but it's a software, does tax stuff, QuickBooks, all these different companies that they own, hold companies under their holding company Intuit. Says Wednesday they're downsizing 17% of their global workforce to simplify operations and focus on AI integration. So again, the AI word keeps coming up. The layoffs take effect July 31st and will impact roughly 3,000 people, including multiple office closures in Reno, Nevada, Woodland Hills, California. And this is from the CEO that said this. He told staff that the strategic reset and streamlined structure would help the TurboTax parent deliver better products separately. The software maker delivered stronger than expected third quarter reports. So people are really upset about this. They're saying, hey, our profits are better than ever. We're more efficient. We're more lean than ever. But we still need to cut because we're going to integrate AI even more. And so that's what's going on in a lot of different places. Zuckerberg said the same thing. If you see here, Zuckerberg touts consequential AI moves amid layoffs. He said success isn't given. This is from Mark Zuckerberg in the note that he said to the laid off people, apparently. Success isn't given, declared Mark Zuckerberg in a memo to employees, just as the tech giant began laying off about 10% of its workforce. The job cuts were expected to total around 8,000 beginning in earnest on Wednesday. It affected staff in Asia and Europe, and they were notified by email early in the day. Another 7,000 workers will be relocated to AI related roles. In his note, he called AI the most consequential technology of our lifetimes, adding that it will define the next generation. Which, I mean, hey, those words are not true. They are true in some respect. And so they're making moves again. They've been doing a lot of cuts and getting a lot leaner. That they meaning Meta over the last several months. And this is just another example of that. Again, touting AI as they streamline and integrate as the biggest reason for these cuts. And so that's a theme that you're going to see more and more. So just be prepared for that. On the other hand, let's talk about companies that are integrating AI and then IPOing. OpenAI is going to file for its initial public offering before the week is out. OpenAI could file for initial public offering as soon as Friday. This is from the Wall Street Journal, citing anonymous sources. Bankers at Goldman Sachs and Morgan Stanley have helped the Chat GPT maker drop a prospectus. Some of those sources said the listing could be as soon as September. And so, if you understand that, like, interesting dichotomy, you have big tech companies cutting because they're integrating AI, and the AI companies IPOing, and that what does that mean? They're minting a bunch of billionaires, and for sure, definitely a bunch of billionaires because their initial public offering, meaning there's these stock that the private stock that they own is now going to be the liquid. It's going to change hands in some respects to the secondary market, to consumer, to regular investors, retail investors that want to buy stock in OpenAI. And that's going to allow the liquidity for the people that were early investors, the owners, the management to sell some of their shares, obviously, and that prints them to be liquid billionaires, right? Liquid billionaires and liquid multimillionaires for a lot of people that are early employees of the company. And so that's what's interesting. So you're seeing laid off, and then you're seeing these people IPOing as well. And SpaceX is also IPO, and it's after months of speculation. Elon Musk's SpaceX officially filed for initial public offering, and this is on Wednesday, setting the stage for what is expected to be the biggest market debut in history. So, from the company's prospectus, SpaceX generated 4.6 billion in revenue in the most recent quarter, with a net loss of 4.28 billion. The bulk of SpaceX earnings last year came from its Starlink internet services, while its AI operations produced over 6 billion in losses. The rocket maker plans to trade under the ticker symbol SPCX on the Nasdaq. So now SpaceX is it's an AI company. He folded all his operations under SpaceX. Beside, I think Twitter even as well as under SpaceX. Yeah, and so he's folding it all under SpaceX, IPOing it. This is Elon Musk. I'm saying is doing this, and so another AI company at its core, that's also a rocket maker, is doing an IPO again, minting a bunch of billionaires and multimillionaires. And Elon Musk is actually going to be a trillionaire if he's not already. He will be. Um, and yeah, that's pretty interesting if you think about that difference between them. Um, Other news between OpenAI and Elon Musk. I don't know if you guys saw this, but Musk lost the suit. He sued OpenAI, um, and it looks like he lost. Jurors rejected Musk's allegations against Sam Altman and OpenAI and found that the defendants not liable on all claims. And this was on Monday. It was a big trial, which we saw Sam Altman, and Brockman removed from the open. It could have been removed from OpenAI's leadership. It took 3 weeks, but the jury didn't even need 2 hours to reach a unanimous verdict. He waited too long. They said that he waited too long to bring the suit forward and exceeded the statute of limitations. So they just said, okay, maybe he had some claims, but they said it was too long. Musk alleged that OpenAI abandoned its founding mission as a nonprofit and to get dedicated to developing AI for humanity. Instead, it became a profit-driven company closely connected to Microsoft. So I don't know if you guys knew this. OpenAI started as a nonprofit. So yeah, this was a huge loss for them, I guess, for Musk, but they did lose it. And people go on. And are you guys following these big trades by these bigger, large capital companies? So Berkshire Hathaway, they all these big companies that have, I think it's about $100 million in assets, they have to file 13 Fs, which shows what they're holding, what they traded, what they bought, what they sold, but it's in arrears, so you're not going to get it real time. Obviously, it's like 3 months later. But according to the latest 13F filing, Berkshire Hathaway sold 5 million shares of their stake in United Health less than a year after first buying the stock in the second quarter of 2025 as part of a broader portfolio overhaul under Warren Buffett's successor, Greg Abel, who also dumped Amazon, Domino's, Pool Corp, MasterCard, and Visa, though he did add two new companies to the basket. And if we click this link, we can get a chat on their current holdings. Berkshire Hathaway's largest holding is Apple. Alphabet's one of their larger holdings. Coca-Cola, he loves those value companies. Coca-Cola, he loves oil companies, petroleum, AMX. And so you got to look there into their book of portfolio right there. Pretty quite interesting if you dive deep. So yeah, that's interesting enough. Any other news that we need to discuss? We've talked enough Tesla and AI. I think there was something else on this page. Are you guys watching the NBA Finals? NBA Finals, excuse me, not even finals. I'm calling it the NBA Finals because it's OKC and San Antonio. Whoever wins that, I think wins. I believe Spurs take it. That's who I bet on. But it's really good games actually. But basketball is kind of back. It's really good games. Nothing else. I don't think there's anything else of importance for us this news wise. Let's jump into something that people have, wondered about and haven't really gotten an answer to. How you actually look at removing money when you retire. That's the big thing. How do you actually look at removing money when you retire? So you think about it, there's different strategies that people employ, but the first thing you would want to do is go to your taxable accounts first, like, or when you are pulling money from these accounts and you're presumably retired, you want to first hit the taxable accounts, like your 401k, your traditional IRA. Those are the places you'd want to go to first. And so let's back up for this for our purposes of this. So when you think about it, let's say let's give it a better example. Let's say someone's like semi-retired or getting close to retired. Where do we want to attack first when it comes to? You can do different strategies as far as accessing your accounts. And now we're talking about minimizing the tax impact. For minimizing the tax impact, the first you want to do is hit your taxable accounts first. So many people do start with the brokerage. That's our taxable account. So you will want to start with the brokerage because if you think about it, lower capital gains tax rates are better for you in a scenario that your capital gains tax rates are going to be lower. Presumably you have no income. And so you're going to really be on the lower end for capital gains because you presumably you hold these shares for more than a year because you're close to retirement. So you can control when you sell them and how you sell them, and have your advisor allocate that out first and then spit the cash out to you, so that you have a portion for a couple of years there as well. Next, you want to hit the traditional retirement accounts like your IRAs and your 401ks that you may have not rolled over yet. So I would first roll them over into your IRA so it's all organized, and then you're able to start to go from there. And these are taxes ordinary income when withdrawn. So you have to just plan carefully with your advisor because they are and your person. You are taxed at ordinary income. So if you do a large withdrawal, you could be pushed into higher tax brackets. So you want to parse out how you do the withdrawals, on these traditional and 401ks. The last one, if you do have a Roth IRA, that would be the last one. The Roth IRAs, and if you did after tax contribution to a Roth 401k, they're the most tax efficient accounts later in retirement because qualified withdrawals are free. So people usually keep those in longer, have those invested longer. It can help during other years if you have higher income and you want to take these funds out at that time. So you could do Roth conversions as well from a traditional into your Roth to take the tax impact at that point, and then later you'll have, the ability to convert, have it converted so you can have the ability to withdraw tax free at that time. So you want to think about those strategies and work with your advisor because there's different ways to go about it. But there are ways that can help minimize taxes paid when you do withdrawals in retirement or just in withdrawals in general before retirement. So think about that heavily. Let me know your thoughts when we get back next week. We will do this next week, so make sure you share this with your family and friends. Talk soon.